Hello everyone, welcome to the channel. In this video, I will show you my trade on Coinbase, as well as explain my thought process and thesis behind the trade. So let's get right into it. Today we came in, the markets were down, all the indices were gapping down, plus the crypto sector was down a lot as well. And Coinbase, as you might know, it's a cryptocurrency exchange company with the ticker coin. Coinbase was showing relative weakness. It was down over 5% pre-market. Plus, we were right above all-time lows for coin. It's a recent IPO, so coin has never seen prices below 208. So because of all of those factors, I decided to do something I don't normally do. I decided to put in a stop order just below the breakdown price. I don't normally like to short breakdowns, but in this scenario, I thought that there is a high possibility that we're gonna punch through the level and see a strong flush down out of the open as investors and swing traders rush to liquidate their positions because there is no support. Now we're entering an area of price discovery. There is no levels to trade off, and you never know how low can a stock go. Yes, it already went down 5%, but Netflix was down 21%. So yes, 5% a lot, but it can go lower. It can always go lower. Another important thing is that I decided to go with small size because I knew that Coinbase is going to be volatile out of the open. And if this flush below 208 does not materialize, I need to be able to hold through the pullback. I don't want to be shaken out of a good trade. That's why I always recommend it's better to be in with a small size and be adding into a trade as it works out rather than taking too much size out the gates and then regretting it. For those of you who don't know, a stop order is executed when the actual price reaches your execution price that you've given to your broker. So let's see how the trade played out. Here we opened and we did not have the immediate flush that I was anticipating. It did not go to 208. In fact, it held the pre-market low, but I was patient. I saw a lot of red on the tape, so I knew that we're at least gonna test 208. And here, as you can see on the level 2, there is a big wall of orders at 208. And I think when you see something like this on level 2, this is a level that you can trade off. And other traders see this wall of liquidity as well. So everyone who's been buying pre-market or who's been buying into this flush, or even investors and swing traders that have been buying here previously, are probably looking at this wall as their way out. And if traders see that price pushes through this level, usually you can see a decent flush. And my order is right below it, 207.99. As you can see, a lot of orders just were punched into 8. Somebody just sold 2,500 shares. And you see somebody also just sold 4,500 shares. And as you can see on my 15-minute chart, that just within the first minute, today's 15-minute volume candle is already almost as big as yesterday's in just 1 minute. In this minute, coin traded over 200,000 shares. So that's also an indication that people are running for the door, people are selling, and that made me more bearish, more convinced in this trade. And here's that nice little flash that I was talking about. In my trading, personally, I like scaling out of good trades. And as you can see, I've put in a limit order at 205.65 here for just one share on Arca. However, the price started bouncing back, so I ended up having to hold through a pullback. And I had a high conviction in the trade. And as I said previously, I took small size just exactly for this reason, so I am able to hold through the pullback because I want to risk just $20 per trade. And if I took 20 shares or 50 shares, I would be in trouble already. Having 6 shares means that I can easily give it three points. So I decided to put a stop order right above the daily high. So you can see I'm checking what's the daily high, and I decided to put it at $210.48. Yes, here you see I placed this order to get me out at 210.48, 5 shares. For some reason, I made a mistake. I should have put a stop order for 6 shares, not 5, but I'm noticing it only now. And I also recommend everyone to use stop orders in situations like this. There is no need to hyper focus on one trade, just watching it, whether it will come and kick you out, because this means you probably might miss out on other opportunities. If you have a thesis, if you have a plan, you should have a level where you are going to get out, or a certain number at which you're going to get out. So if you didn't oversize in your position, you can let it work itself out and just put in a stop order and use technology to your advantage. It will get you out at a good price, and you'll be able to focus on other names as well. Okay, so here Coinbase almost reached my stop loss. My stop loss was just about 50 cents higher than where the price went. And finally, it started reversing before even testing the daily high, which is a very bearish signal, which is good for me because I am short. So I decided to move my bid limit order at right below the current low. I put it at about $205.51. Also made it invisible, made it hidden. I decided to put another bid for 2 shares right above to $205, because knowing Coinbase and those other high-flying names that cost hundreds of dollars per share, I know that whole numbers like 206, 205, and especially big round numbers like $100, $200, they tend to be levels through which price usually either rejects or punches through. So for example, even here you can see on the tape that the price tried to push above 2070, but offers immediately piled in and rejected this price. Now look at how heavy this tape looks. A lot of red, big positions are being sold. So the number 207 gets rejected. Now the sellers are gonna try to test 206. Let's see. And it just flushes through. You see? So here one of my bids got filled. And pretty quickly my second bid got filled as well. And I almost immediately put myself on a bid again and got filled here. So at this point I had only a third of my position, 2 shares left. The next bid I placed was about 50 cents below the current bid. And this is my trading style. I like scaling out of winning trades. I believe this way that I get the most predictable returns. And I firmly believe in paying yourself when the trade works out. Of course, there are traders who focus more on risk to reward rather than accuracy and paying yourself when you get it as soon as you get a move. So we can talk about this in a different video. But for me personally, I started seeing better and better results when I started taking profits when a move goes my way. Because this way, if the price reverses on me, at least I took some profit, you know? And if I get a large move, I can hold a portion of my profit, but it's much harder to predict a large move than to predict a normal move or a small move, you know? And with this strategy of scaling out, I'm almost getting a little bit of both worlds, you know. Then for the final one share, I decided to place a trailing stop order, 80 cents offset price, which means that this order will get me out if a price goes against me 80 cents at any point. And I found that with a trailing stop order, it's much easier for me to hold longer, you know. It's like a little insurance policy. And if I get a large move, I take it as well. You know, the point of a trailing stop, at least in my trading, is not to keep it forever until the price reverses. It's to just get a slightly larger move in the end than I otherwise would. You know, too often, you know, I tried to hold longer, and the price ended up going right back again. So this is the trading style I developed. In a separate video, we can discuss the advantages and disadvantages of this trading method. Also discuss advantages and disadvantages of trading strategies that focus on risk to reward. So if this sounds like something that could be of interest to you, please consider subscribing to this channel. So now I'm just going to quickly fast forward the price action so you can see that Coinbase actually ended up selling off for the entire day. So you might think that, hey, you should have held longer, you would have made much more money. And yes, you would be right. But the point is that it's very rare that we have such bearish sentiment and such sell-off days. And at this point, I couldn't tell whether it's going to be a sell-off day or if the price is going to reverse on me, you know? But taking small and moderate moves is the most predictable way to make money, in my opinion. And that's what I'm trying to do. I'm trying to, you know, use statistics and data-driven decision to make money. So thank you for watching the video. If you like it, please like and subscribe. See you in the next one. Bye.